Taiwanese manufacturers quit China due to trade tensions and rising costs. Famei Optical's human resources officer is working overtime. Taiwanese sunglasses and goggles makers are aiming to hire 30 workers for their new factory, many of whom are working urgently. Based on most of China's production for over 20 years, Famei is now expanding domestically. The new factory in Taiwan, which opened earlier this year, is part of a plan to create 180 jobs and expand the group's footsteps with high-margin products. Fami is not an outlier. Hundreds of thousands of Taiwanese companies are saying goodbye to China due to rising costs and trade tensions between Washington and Beijing, a dramatic change in Taiwan's corporate environment that will have a significant impact on global manufacturing. Is shown. Lu Jin, editor-in-chief of CRIF China Credit Information Services in Taipei, said, "The ranks of companies owned by Taiwanese companies in China have collapsed structurally. Revenues grew to less than half of China's largest 1,000 Taiwan-owned companies last year, and total pre-tax net income fell by more than a fifth to its lowest in 9 years, according to the survey. The era of joint prosperity for cross-strait industries is over," said Lu. Since the late 1980s, Taiwanese companies have been approved for a cumulative $191 billion investment in mainland China, some of which are fascinated by reduced operating costs. As a result, China is one of Taiwan's largest foreign direct investment destinations, and one of the largest foreign investors in China. According to analysts, their massive push into China was both a blessing and a curse.